Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. First of all, would like to wish all our viewers a very happy new year since this is the first show of 2025 for me. The Bulls did start the week on a strong note. We saw, first 2 days kicking off with a bang, but then, that party kind of ended on Friday. But let's see whether or not we can resume that party this week or not, given the fact that the GIFT Nifty is hinting at a strong start. But remember, it's the third quarter earnings season that kicks off this week that will decide the future course of, course for the market. Lots of stocks are in focus given the fact that the third quarter business updates have started trickling in. So you have the likes of HDFC Bank, Bajaj Finance, a lot of smaller banks as well. And, FMCG names like Dabur, Marico, they've also reported their third quarter business updates. And you also have Titan, Jubilant Food. So lots of these updates are trickling in. And let's see how they react to it in trade. But of course, the big one, TCS, will be reporting numbers on the 7th. We'll have to see how things really pan out when it comes to the third quarter earnings season. Lots lined up over the next 40 minutes. Also, of course, all your stock related queries will also be in focus. So keep them coming in on a live feed. We'll try and take them up with our experts on the show. But of course, before we move any further, let's take a look at the top headlines at this hour. Wall Street ended higher on Friday with the S&P 500 and Nasdaq gaining over 1% each. However, indices closed lower for the week despite Friday's big move. Asian markets open largely higher. The Nikkei trades with mild losses, but the GIFT Nifty is hinting at a positive start for the Indian market. Crude rises above $76 a barrel with the Brent gaining over 3% last week on expectations of higher demand from China. Meanwhile, gold prices slipped from 3-week highs. Among stocks in focus, HDFC Bank's third quarter business update reflects slow loan growth as the focus remains on reducing the credit deposit ratio. Meanwhile, Bajaj Finance's AUM growth remains robust even as loan growth hits a 7-quarter low. IndusInd Bank's business updates see deposit growth at its weakest in 16 quarters. And today marks the record date for the ITC Hotels demerger. The restructuring will see ITC retain a 40% stake in the hotel business, while the remaining 60% will be held by shareholders. Meanwhile, Kotak Mahindra Bank's Chief Operating and Chief Tech Officer Milind Nagnur resigns effective the 15th of February, citing personal reasons. The exit comes even as the RBI's tech embargo on the bank continues. All right, let's quickly take a look at the cues for trade then. The market snapped out of a 2-day gaining streak on Friday. It was the financial pack that was underperforming. HDFC Bank, ICICI Bank, these were among the top contributors to Nifty's fall. IT stocks as well moved lower. You had the likes of Wipro, Tech Mahindra, TCS. These were among the top losers on the Nifty on Friday. Remember, TCS and Tata Elxsi, these are some of the counters or the companies rather that will be reporting earnings this week. So IT will be in focus. If you look at DMart, the stock of DMart, that jumped 11%, given the fact that the Q3 business update was fairly strong. Remember, DMart as a stock has not been able to fire up and it has been under pressure amid stiff competition. So yes, a good third quarter business update, lifted sentiment, and that was reflecting in the stock prices as well. Sensex and Nifty were up almost 1% for the week, although, Friday wasn't such a great day. But given the fact that we started 2025 on a strong note, we saw weekly gains on the index. Mid-caps were outperforming as well, gained 2% last week. Auto index was up 4% on the back of encouraging December sales data, but realty was the biggest loser in terms of sectoral movers. ONGC, Maruti, Eicher, Bajaj Finance, these were some of the top gainers last week. In terms of the put-call ratio, that dropped sharply to 0.86 from 1.23 levels in the previous session. Looking at the band list, the FNO band list, no new entrants or no deletions as well from the list. But Manappuram Finance and RBL Bank, these are some of the stocks that will remain in FNO ban for today. Foreign investors who had turned net buyers in December have once again turned sellers. In fact, in the first 3 sessions of 2025, they have been net sellers. In Friday's session, they sold stocks worth 4,200 crore rupees in the cash market, but DII buying continues. The buy figure for Friday, however, was fairly meager, 820 crore rupees in the cash market. On that note, let me bring on board, our technical expert for today. Joining me is Ruchit Jain, who's the Vice President Technical Research at Motilal Oswal Financial Services. Ruchit, always a pleasure chatting with you. First of all, wish you a very happy new year. But looking at the fact that we have snapped out of a 2-day gaining streak on Friday, but still the 24,000 mark holds on the charts. Do you expect the index to defend that level as we step into the earnings season? And what are the support levels that one should be watching out for in case we are headed lower from here?
Yeah, hi, very good morning, Nandita. Wish you and your entire team to a very happy new year. Definitely, as we have started this year, we have already seen some good price-wise corrective phase in last 3 months of the previous calendar year. But now it seems that markets would enter some consolidation phase where a time-wise correction could be seen. We have certain events lying ahead of us, starting with the corporate results, the Q3 earnings which would come in, then the budget which is there. So I think the price-wise downside seems to be limited from here on. I think 23,700 with the 200 EMA would act as a good support. And if you look at the recent corrective phase also, majority of the price-wise correction was mainly because of FI selling, where they were selling not only the cash segment, but they have also formed significant short positions in the index future segment. The long-short ratio is somewhere around 17%. It was around 13% a couple of days ago. And historically, we have seen that whenever their long-short ratio comes in the range of 10 to 15%, the room to create fresh short reduces over there because they are already short heavy positions. And we have Q3 earnings budget ahead of us. So I think some of these short positions would get covered up before these events, so that the positions are not much heavy on one side itself. So I think that would provide some cushion to the markets. And before the events, we would see some consolidation in the range of 23,700 on the lower side. On the higher side, 24,250 would be the initial resistance, followed by 24,500. So we do not expect any fireworks in the index on the either side, but rather more of a time-based corrective phase before we see next leg of breakout.
All right, expect time-wise correction to continue. But in terms of the banking pack, lots of stocks will be in focus, right? HDFC Bank for one has come out with its third quarter update. Deposit growth has outdone the loan growth by a wide margin. Of course, the company is looking to rein in the LDR, loan to deposit ratio. And aside of that, you have a lot of these brokerages who have come out with reports on this stock, whereas when Nomura has has a neutral call on the stock, target price is at 1780 rupees or thereabouts, and they've said that the deposit growth was healthy, driven by growth in term deposits, but the growth in its gross AUM has been soft. On the other hand, you have Jefferies that has a target price in excess of 2100 rupees on the counter. It has a buy call. And, it said that the loan to deposit ratio fell to 99% on a YY basis, vis-a-vis the target range of 90%. And the valuations, according to Jefferies, do factor in softer loan growth. Margins, net interest margins will be the key to watch out for on an HDFC Bank. Stock is down. Of course, on Friday, it was the top contributors to Nifty's losses. Stock is down 3% last week. The other counter that's in focus is Kotak Mahindra Bank as well, because there has been a top level exit, and in the pre-open looks like it is expected to emerge as the top Nifty loser. These two counters in particular, how would you approach them?
So, Nandita, if you see, both the counters have seen some consolidation over the last few years. We have not seen any big trended moves in spite of the markets showing such a good run up in last couple of years. In fact, if you look at HDFC Bank historical data, then at the start of 2022, January 2022, the stock was trading somewhere in the range of 1740, 1750, and today also it's around the same levels. So it's even Kotak Bank in this phase have not done significantly well. So I think this still the time-wise correction continues within both these names. But I think over here, Kotak Bank could stand out going ahead comparatively, because if we look at the price volume action, then the volumes have started improving after the recent base formation in Kotak Bank. So I think HDFC Bank, if we get any dips around 1680, 1700, the 200 EMS support would come in there. So that could be a good place, where one can look for, buying opportunities. And Kotak Mahindra Bank, I think relatively here the downside seems to be limited. 1720, 1740 is acted in should be a good support base that has recently been formed. So I think buy on dips approach should be recommended in both these names. But as I said, they have been in a long consolidation phase since last 3 years. So no, one should have enough patience so that whenever the trend changes, then one can expect good momentum. But for time being, I think buy on dips should be a good strategy to play out in these names.
All right. Another stock from the banking pack that I wanted your thoughts on is Bandhan Bank. The stock has been stuck in a downtrend, right? It has. It's in fact very close to its 52-week lows as well. 157 is the 52-week low on the counter. The third quarter update, if you see, hasn't been all that encouraging. The loans and advances, they are up 2% on a QOQ basis. Deposits are down over 1% on a quarter-on-quarter basis, although on a YY basis, they are up 20%. CASA ratio at 31.7% vis-a-vis 33.2% on a quarter-on-quarter basis, and has also come down on a YY basis. But looking at the stock, would you say that the worst is over chartically? Do you think it has entered an oversold zone and here on it could head higher going forward? What are your thoughts on this particular stock?
It is oversold, but has been a underperformer since long time. That lower top, lower bottom structure is not getting rejected. Even in fact, previously during the quarterly results, during Q1 quarter results and Q2 quarter results, also we did witness an up move in the stock, but the follow-up move is not there. So I think within the sector, it has been an underperformer. So unless we see that high top, high bottom structure getting resumed or any kind of price up move supported by good volumes, I think one should avoid bottom fishing here.
All right, avoid bottom fishing in a Bandhan Bank. And on that note, we have the first ticks coming in. There goes the opening bell, and we are seeing some positive ticks as of now. It's a good 20-point uptick on the index, although it is extremely flat, but it's good to see that we are starting the week on a positive note. 24,000 holds on the Nifty. Sensex as well, somewhere around 90 points higher at the current juncture. 79,300 is where we are at. The mid-cap index, that's also moving in tandem with the benchmark. So almost a 0.2% kind of a gain coming in on the mid-cap index. But if you look at the bank Nifty, below that 51,000 mark now, 50,900, that's where it's at the current juncture, 75 points down on this index. And if you look at some of the top laggards, I just want to point out Kotak Mahindra Bank on the back of a top level exit. That is the top Nifty loser at the current juncture, almost 1.5% kind of a downtick coming in on Kotak Mahindra Bank. Aside of that, if you look at some of the other sectors, I want to see which of the sectors is taking the lead at the current juncture. Banks not doing well, as I just pointed out, but in terms of other sectors, I think Auto Pack is up somewhere around 0.3%. IT is also doing well. Remember Friday, IT was among the top laggards in terms of sectors, but today showing strength, 0.6% kind of a gain coming in on the IT pack. Metals out of favor, 0.5% down tick there. Pharma extremely flat. You see the Nifty PSU Bank Index, that's also lower by about 1% or so. Nifty Realty Pack is extremely flat at the current juncture, but Realty as well as a pocket didn't do all that well last week. In terms of individual movers, I want to see which is the pocket or which is the stock that is taking the lead. It's Bajaj Finance. No points for guessing, because the third quarter update has been fairly strong for Bajaj Finance. Assets under management up 28% on a YY basis. Deposit book was up 19%. If you look at the company's customer additions, that has been the highest everly on a quarterly basis, highest ever quarterly new loans booked in the quarter gone by as well. And if you look at some of the brokerages, they have maintained their bullish stance. JP Morgan is overweight, target price is at 7,300. So yes, good going for Bajaj Finance. And even the Bank of America, they have also come out with the buy rating, and the target price is in excess of 8,500 rupees. In fact, 8,800, that's target on Bajaj Finance from Bank of America. So yes, Bajaj twins taking the lead, and so is Titan. It's fairly upbeat, shining bright. In fact, it has overtaken Bajaj Finance to emerge as the top Nifty gainer at the current juncture. almost a 2% gain coming in on Titan, and that's on the back of its third quarter update, which has been fairly strong. It has registered a growth of 24% on a YY basis in its standalone business. Jewelry business, that has seen a growth of 25% on the back of strong festive demand. Infosys doing well, Tech Mahindra doing well, HCL Tech, TCS, all of these technology names doing well today. And, aside of that, you have Britannia. That stock is also doing well. Grasim, Shriram Finance, you have Aisha Motors, ICICI Bank, Axis Bank doing well, although the Nifty Bank index is out of favor. And among the losers, aside of Kotak Mahindra Bank and ONGC, you have some of the metal names like Tata Steel not doing well, Coal India among laggards, SBI, Nestle, Asian Paints. These are some of the other counters that are under pressure. But looking at the open, Ruchit, first of all, your thoughts on Bajaj Finance. The stock did well last week as well. If you look at the last week move, the stock gained 7%. Today as well, of course, on the back of strong third quarter update, the stock is doing well. Where do you expect the stock to head from here? On the higher side, what is the kind of level you'll be watching out for here?
So last week itself, we witnessed a breakout above that important resistance of 7,250 in the stock, and that move was also supported by good volume. So I think this clearly indicates that the short to medium term buying interest would continue in the stock. Previous swing high was around 7,800. So at least in the short term, one can expect levels around 7,800 in the stock. Any dips towards 7,300, 7,250 would be seen as a good buying opportunity in Bajaj Finance.
Okay, that was about Bajaj Finance, but Dabur is one stock that's in focus from the FMCG pack. Numbers, in fact, the third quarter update came out over the weekend. Stock is reacting negatively, down over 2%. The rural consumption has been resilient, as it's being pointed out by the company, and it of course grew faster versus urban, because urban consumption has been slowing down, and it has been evident given the fact that volume growth has been a spot of bother for these FMCG companies. General trade was still under pressure. Alternative channels like modern trade, e-commerce and quick commerce saw strong growth. Consolidated revenue is expected to register low single digit growth for the company. And in India, it's beverage portfolio is expected to report muted growth, and the culinary business is expected to post strong double-digit growth. The international business is also expected to see double-digit growth in the constant currency terms. Looking at some of these FMCG names, they have been under pressure. If you look at the last 6-month performance, particularly for Dabur, the stock is down almost 18 to 19%. And of course, the slowdown in urban consumption has been a pain point for the entire FMCG basket. But some of the rural facing companies like Dabur, Marico, may stand out given the fact that the rural demand is picking up, and there are clear signs of that. But on the charts, 508 is where it's at. For the very near term, what kind of targets should one work with?
If you look at the FMCG space since last 3 or 4 months, I think there has been consistent underperformance compared to the other sectors, and still there are no signs of trend reversals coming in. So specifically, if we now talk about Dabur, any pullback moves are getting sold into. The major support for the stock going ahead is around 490, which was the April 2024 low. So for now, the short-term trend still remains on the negative side. Around 490, I think the stock should manage to find some support.
All right, that's about Dabur. But I also want to get your thoughts on ITC. Today is a record date for the ITC Hotels demerger. Of course, the conglomerate will retain 40% stake in the hotel business, and the remaining 60% stake in ITC Hotels will be directly held by shareholders through a rights entitlement. Now, shareholders will be getting one ITC Hotel share for every 10 ITC shares they own. I just want to get in your thoughts, because ITC has been under that 500 rupees consistently, right? The stock, although was up 1% or so last week, but going forward, post this demerger, how would you really look at the stock now?
Yes, certainly that the stock is not able to surpass that 500 mark of late. But I think somewhere the price-wise corrective phase for the stock has been done, because around 450, 455, there's a very strong support base as well for the stock. So there's a signs of some time-wise correction or consolidation to happen in the stock in the near term.
Okay, I was just going through our feed and I did spot a query on ITC from Geetu Sandesh. Hope this answers your query. Uh, but let's shift focus and get in your viewer queries and get them addressed by Ruchit. Anand Swaminath, he wants to know your thoughts on SBI from a 2-week perspective. He wants to he wants to point out that he has bought the put option for January with a strike price of 800 rupees and a premium of 21.44. How should he go about his holding?
Overall, if you look at the IT space, then no, I think much would depend on how the quarterly results come in, no, from these IT names. And LTM specifically, if we see, then the stock is going, no, through the stock has already seen some good corrective phase from the highs of 67 to
Ruchit,
5500.
we're talking about SBI,
SBI.
State Bank of India, right?
Yeah, yeah, sorry, I got it wrong. If you look at the recent pullback move in the banking space, then the PSU banks has not participated so far in this up move, no, when the bank Nifty was doing well. So this clearly indicates that the momentum is still missing from the PSU banking space. SBI, I think the stock has a good support around 770, 775. So for now, we can hold his no options which are on the negative side. Keep a stop loss of 810 in case if the stock surpasses 810, then no, take an exit. Otherwise, 770, 775, the stock comes, that would be good levels where you can look for profit booking.
Okay, that's the view on SBI. Hope that answers your query. The next query is coming in from Naveen and he wants to know your thoughts on ONGC. Of course, last week was a great one for ONGC. The stock was up 9% or so. Today it is witnessing a bit of a cool off, but after the big up move last week, how should one approach the stock? And if they have a longer time horizon, say about a year or so, what should the approach be? Because it is still some time away from its 52-week highs of 345 or thereabouts.
Yeah, so we have seen a decent price-wise correction along with the broader markets in last 3 months. But yes, if you're looking from a bit longer-term perspective, then I think no, you should hold on your existing positions, or you can no, look to buy in a gradual manner, where no, any corrections from here could be used as an opportunity to accumulate for the portfolio. But as I said, it's not a short-term trade over here in ONGC, but no, 230 to 225 supposed to be a good long-term support for the stock. So the downside seems to be limited from here on. Any existing positions then continue to hold on. Fresh buying can also be done in a staggered manner. If you but no, would advise to keep at least 2 to 3 quarters view in this.
Okay, that's the view on an ONGC. The next query is coming in from Ravi Teja Kona and he wants to know your thoughts on Infosys. So this time we are talking about the IT pack. The stock has been in a clear uptrend. If you see the last 6 months or so, it has given an 18% uptick. If you look at the last 3-month chart, I'm going to just see how it's done over the last 3 months since last quarter. The stock is up somewhere around 4% or thereabouts. But given the fact that it is very close to its 52-week highs of 2006, should one keep that level in mind if they want to trade ahead of the results?
Nandita, I think yes, overall trend for the Infosys still remains positive. We are witnessing that any declines that are coming, no, we could see some good buying interest over there. So 1800, 1850 is a good support range for the stock. Until that support range is intact, I think the price-wise correction on the downside seems to be very limited from here on. So Infosys looks positive from a bit mid to long-term perspective. Corrections, if any, of course, the quarterly results when come, we would see some good momentum based on that. But corrections, if any, then that should be used as a buying opportunity over there.
Okay, use corrections as a buying opportunity on Infosys, but the trend is clearly on the upside. Let's shift focus to the next query then. This one's coming in from Nitin Shaji and he wants to know, what he should do with the Bajaj Healthcare. Now, the stock is down 3% at the current juncture. I think in the last 5 days, it has seen a good up move of 9% or so, and the last 1 month, the stock has clocked in a rally of over 40%. Is this dip a buying opportunity, or should one wait for the stock to cool off a little more before getting into the counter?
We have seen very high volumes in the month of December. The stock gave a breakout above that 450, 460 mark, which was the previous resistance, and rallied towards 650, with very high volume. So overall trend still remains quite positive on the stock. But yes, the stock has already seen a good up move in last 1 month. So the momentum readings are a bit overbought, which should get cooled off before the next leg of up move. So not at current levels, but if we get any dip towards 560, 550, I think that's where the 20 EMA support is placed. So one can look for buying opportunities on such dips. So, but if any existing long positions are there, then I would suggest to continue to hold on to the stock, whereas fresh buying should be done on no dips towards 560.
Okay, that's the view on Bajaj Healthcare. But the next one is a query from the fertilizer pack coming in from Satya CK, and he wants to know your thoughts on a Chambal fertilizer, and his time horizon is 3 months. The stock hasn't done all that well. I think the fertilizer pack itself is a fairly volatile space. Last 6 months, it has given negative returns. 1 month return has also been negative, 9% down. Last 5 days haven't been all that great, just about a percent higher over the last 1 week. But are you spotting any clear trends on the chart? And if one has to hold the stock for 3 months, what is the kind of level that he should work with?
So we have seen some consolidation off late, but no, the stock has not seen any kind of price up move supported by high volumes. Generally, before the budget, we do see some good buying interest in fertilizer names, but it's not the case this time. Last time when the stock witnessed a dip in this recent corrective phase, the 200 DMA acted as a support, which is now around 460, 470 zone. So not looking much constructive at current levels, but maybe near if we get some dip towards that 460, 470, then we could see some good risk reward issue to take some counter trades over there.
Okay, that's the view on a Chambal fertilizer. Hope that answers your query. We're just a little short on time, so just one more query to go. Shweta, she's written in and she wants to know if it's time to book profits in Persistent and Dixon, or is there still some steam left in these two stocks? 6 months, that's the time horizon she's working with, and she's making a profit of 15% on both the stocks. What should she do? Ruchit, what would your advice be?
See, as of now, both the stocks are in an uptrend. There's a high top, high bottom structure, and both these names, if you look at last 3 months corrective phase in the broader markets, but both these names have done well during the corrective times as well. So I would recommend to continue to hold, but yes, you can keep a stop loss before the below the crucial support so that your profits get protected. For Dixon Technologies, support is around 17,450, so you can keep stop below 17,450 on your existing portions, and for Persistent, you can keep a stop loss below 6,250 and continue to ride this trend.
All right, that's about these two stocks. Hope that answers your query, Shweta. But with that, we've come to the end of the query segment. Ruchit, before I let you go, what would you be recommending for viewers, in terms of stock picks for the next couple of sessions?
So I think overall trend for the market still remains sideways, as I said at the start of the show itself. So I think if you look at the stock specific opportunities, consumer durables is one segment which of late have started showing some signs of reversals. And within the consumer durables pack, Bata India is one stock which is looking positive. Technically, the stock has given a breakout from a inverted head and shoulders pattern on the daily chart, which is a bullish sign. And we expect levels around 1540, 1560 to come in the near term. So one can go long on Bata India over here with a stop loss below 1420 for potential targets around 1560.
All right, those are the recommendations coming in from Ruchit. With that, Ruchit, I would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Look forward to more interactions in the future. Have a great day.
Thank you.
Well, on that note, before we bring on our next guest for today, let me just take a look at the market and how we are faring at the current juncture. We are almost where we were at the open, 24,059. That's where we are at. It's just about a 0.2% kind of a gain coming in on the index, and the Sensex as well, up somewhere around 250 points or thereabouts. But on that note, let me bring on board our next guest for today. Joining me is Dhiraj Relli, who's the MD and CEO of HDFC Securities. Dhiraj, a pleasure chatting with you. Wishing you a very happy new year. I just want to understand, we saw a 9% kind of a gain, on the Nifty last year. But there have been quite a few headwinds that have emerged, right? The second quarter earnings were a washout. FIIs have been sellers. Although December was a good month, we saw a comeback of sorts. But again, January, the first three sessions, we've seen the foreign investors turning net sellers. Of course, there are quite a few factors contributing to that. But in absence of FII flows, how much of a support do you see from the domestic interest or DII interest that we have seen in the market? Do you think that can fill the gap, left by the FII sell-off? How do you expect the next 12 months to pan out for the market?
Good morning, Nandita. Happy New Year to you and your team and your viewers. I think you mentioned about the 9% return of the Nifty. If we have to look at the overall return of various asset classes, gold gave 19% returns, and mid cap and large cap, we've seen 25% kind of returns, and debt gave 10%. Even real estate gave 15 to 20% kind of returns in the calendar year 2024. So to that extent, I think 2024 was a great year despite having active multiple countries going through elections like India, US, and many more countries, and also a lot of headwinds coming in from the geopolitical activities. So from that point of view, I think we've had a decent year. Only for India, if we talk about the GDP growth, September quarter was a blip, and it was one of aberrations according to our estimate. I think we've seen some recovery in the Q3, and we are very positive that we will get better numbers, better print for the Q4 FY25. So from that point of view, I think India will continue to remain as one of the best performing economy globally. We are expecting 6.7% kind of GDP growth for FY26. And that too with the inflation print of about 4%, 4.1%. Currently for FY25, it is going to be around 4.8%. So I am not unnecessarily perturbed about the macros. Coming back to your point on the FPI flows, I think it's a misnomer that the FPIs have been taking out money from India. If you look at their numbers, yes, they have sold 1,21,000 crore from the secondary market, but at the same time, they've also invested 1,20,000 crores, 600 odd crores in the primary market. So to that extent, net they are invested in Indian market, and they were looking forward for the opportunities, probably alternative opportunities, and that's where we saw some selling pressure in the large caps. So we remain quite optimistic. Yes, the Q4 of FY25 will be again one quarter we need to watch carefully. Q3 earnings will be subdued, but Q4 should be showing us positive signs, and we are very optimistic about the FY26.
All right, Q3 will remain subdued, and fourth quarter onwards, maybe there could be some recovery, in the quarterly earnings. But in terms of sectors, what are your expectations from IT? Because third quarter is a seasonally weak quarter for IT. Last quarter as well, the numbers didn't really spring any kind of fireworks. How are you viewing the IT sector ahead of numbers from TCS?
I think this Thursday we have TCS results, and probably next Thursday we have Infosys results. So we are not expecting a significant improvement in the numbers. 3-4% kind of a revenue growth will be there in Q3. Q3, as you rightly articulated, Nandita, that is always a muted quarter. But what will be important to see the management commentary? I think once Trump will take over the US administration, things will look very different, and we will start seeing more and more activity in the US market. US markets have been resilient with America First strategy articulated by Donald Trump. We believe that it will be, in a nutshell, positive for the IT sector at large. I don't see recovery coming in where we can see double-digit kind of a revenue growth, but high single-digit revenue growth is on the annual. And particularly, I think Indian IT companies are likely to adopt the AI and AI opportunity big time.
In terms of banks, RBI, of course, slashed the CRR in its last policy, and there are expectations of a 25 basis point rate cut in the February policy. Would you be also in the camp that is expecting a 25 basis point rate cut in the February policy? And, would that negate the kind of, margin expansion that would have been brought about by the CRR cut? What are your thoughts in terms of where the margin picture is headed when it comes to banks?
See, monetary policies have their own role to play when it comes to the cost of the funds and also the quantum of the liquidity. I think with CRR cut, we have seen better liquidity in the market, but quantum, so that to the extent of quantum of funds is not a major issue now anymore. And we are of the view that we'll have a shallow cuts in 2025, maybe 50 to 75 basis point rate cuts in India as well as in US. So cost of funds will come down with some lag. It will not come down immediately. I think in H2 only we will see cost of funds coming down calendar year 2025. So that's where we are. And my take is that the 10-year yield will hover around 6.2% to 6.8%, and probably the median number would be 6.4%. So this will have some impact on the positive impact on the margins of the bank. I think more than the margins, PSUs, banks particularly are at attractive valuations. Their asset quality has improved dramatically. And also in the last few quarters with the RBI interventions, there was some check in the credit, and we've seen some slowdown coming in the credit, particularly on the unsecured side and microfinance side. I think that will also improve with the change in the regime at the Reserve Bank. And also, I think the now rural consumption is also picking up, and we will witness more and more capex coming in from the government also. That should change the trajectory and expectations at the rural and urban side also. So my take is that this year will be a great year for the BFSI space. Within BFSI space, I think banks will do better, and within banks also we are more sanguine on the PSU banks.
All right, point taken. You mentioned consumption, right? Rural consumption, of course, there are signs of recovery, but urban consumption, on the other hand, has seen signs of slowdown. But do you think that has reached its bottom? Do you think that was just a 1 to 2 quarter phenomenon, and here on we will see some bit of recovery? In that sense, how would you play the consumption theme?
I think the first half of the year, we've seen less activity from the government because there were elections, central election, and followed by elections in some important states also. But I think now government is doing more capex spend with the vengeance, and we will see that that will translate into a significant improvement in the activity and consumption in both rural as well as urban side. So we believe that the discretionary spend will continue. I think volume growth will still remain muted for FMCG companies for Q3 and Q4, but we are heading for a better volume growth and premiumization both to continue play for FMCG, and we are going to see better discretionary spend in FY26.
What about the quick commerce space? It's a hot space. Competition is heating up. You have Zepto, or the IPO, may come up anytime in the next 3 months or so. Would you be concerned about valuations when it comes to players like Zomato, Swiggy, etc.? And how would you approach it now?
These are pure play growth ideas. I think here it's not about valuation. It's more about the market share. We already have 2 listed players here, and few more are on the anvil, as you mentioned about the Zepto. I think even Big Basket have been increasing their activity. So competition is increasing here, but even now they are servicing only selected city only, and the chunk of their volume comes from the top 4 or top 6 cities only. With the penetration increasing in the top cities, and as well as opportunity to go into the further into newer cities, I think quick commerce is here to stay. They are also taking the market share from the e-commerce space. So it's only about getting habituated to get your products in 10 minutes, 15 minutes. That's where I think Indians are heading to. It's a growth story. It's not so much valuation play. Valuation will always be mind-boggling, and always heightened valuations will be there only. But one has to look at these as a sunrise sectors and not look at the valuation.
All right, that's about the quick commerce space. Lastly, which is that one theme that one should look at for the next 2 to 3 years? Do you think defense manufacturing continues to be the theme to watch out for? Given the fact that the government capex has or is expected to improve in the second half, right? So, would that be one theme that one should be watching out for?
Yeah, so we are an infrastructure deficit country, and government will continue to increase their spend on the infrastructure, improving the infrastructure in the India. So to that extent, I think defense, industrials will be sectors to watch very carefully, and banks are proxy to any such capex and growth stories in the credit side. So to that extent, I think the BFSI, industrial, cement, energy, and IT will remain focus sector for us. Just to touch about the IPO piece, since you mentioned about the Jepto IPO, last year we have unprecedented numbers for the IPO. 1.8 trillion Indian rupee were raised in the IPO, and that too with 317 IPO. These were record numbers, and I think even in the calendar year 25, we will see the flurry of the IPO will continue.
Okay, the IPO market will continue to see activity, and of course it will remain heated up this year as well. With that, Dhiraj, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure, and I look forward to more interactions in the future as well.
Thank you.
Well, on that note, we've come to the end of the show, but let's take a look at what the markets are doing. We have taken a U-turn. In fact, the Nifty and Sensex have both slipped into the red as we speak. 24,000 has been violated on the downside, 23,950 or thereabouts. That's where we are at. And the Sensex is also holding on to that 79,100 mark as we speak. The mid-cap index has slumped by almost 0.7%. If you look at some of the, laggards on the index, you have the likes of ITC, of course, record date for the hotel business demerger. So 5.5% down on ITC on account of that. The other losers are the likes of Tata Steel, Kotak Mahindra Bank, you have BPCL, Coal India, Adani Enterprises, Hindalco, as well as Cipla. On the flip side, what's holding out is Bajaj Finance, strong third quarter update, and the stock is the top Nifty gain on the back of that, 2% higher on Bajaj Finance. Titan as well, 24% growth in its standalone business for the third quarter in its Q3 update. The stock is up 1%, and some of the tech names are doing well ahead of TCS's number this week. So HCL Tech, Infosys, TCS, Tech Mahindra, all of these counters are upbeat in trade. But on that note, we have come to the end of this edition of Opening Bell. Of course, thanks a lot for tuning in. From me and the entire team, thank you for watching. But of course, come back and join in at 3:30 p.m. on Closing Bell, where we take stock of the market close and some of the stocks that will be on our radar. Have a great day and stay tuned to Money Control for all your other news and updates.